Hi there, welcome to Kneppy Invest and welcome to the 26th of August 2025. Time is currently 3:17 p.m. So about 52 minutes left of trading today on a negative day on the market. Not surprisingly, fairly weak lead in from Wall Street with the Dow Jones down, what was it? Down about, if I remember correctly, down about 0.8%. Could be a little bit wrong there. 0.77%, and the Nasdaq down 0.31%. Red across the board when it comes to other indices. TSX down to 0.58%. So not surprised we are down today based off what we've seen in international indices. Even the Asian markets are down a little bit today. Nikkei down more than a little bit, down 0.9%. Hang Seng down 0.18%. And even the American futures are down right now. Not by a lot, but they're still down. So no reason for our market to rally based off the American futures and also the Asian markets. So no surprising to see us in the red and down by 0.5%. Okay, so the agenda for today's video, what I'll do is we'll go through the ASX today, have a look at the best and worst performing sectors, indices, and also companies. And then we'll turn our attention to the top 5 stocks of the day. And all 5 companies in the top 5 stocks had positive reactions from their results. There you go. So a bit of a green tinge to the top 5 stocks. And then we'll have a look at the chart of the day, which is another company that released, I thought, pretty good results today. Share price not up by more than those other 5 companies. And the crap company of the day is also the worst performing company of the day. And no shocks to what that company is. Okay, let's turn our attention to the ASX today. And I've just mentioned a fairly weak lead in from Wall Street. So there is a little bit of negative sentiment in the markets right now. Not a lot, but it's enough to drive some markets down. And funny enough, there was either a podcast or a video that I want to watch. And it just said that the stock market is going to drop 70% and there's nothing the Fed can do about it. However, we have seen these sort of videos being released over the last few years and the market just keeps on going up. Anyway, I think it's very wise to be bullish most of the time, if not all the time. Okay, because the stock markets over time go up, so it's just be wise to be bullish. Okay, now on to the different sectors' performance. I have no idea what is the... Oh, you know what's going to be the top? I'm going to say right now that the best performing sector is going to be staples, and the reason I say that is because of coals. Let's see if that is right. Am I going to be a genius? There it is, staples up 2.84%. And I'm assuming also because of Coles' good results today, and in fact, Coles is in my top 5 stocks. And when I say good results, I mean the market reaction. When I look at the results, I go, ugh, but that's just Coles. And I'm wondering if Woolworths has had a good day today just because of, Woolworths is up 2.18%. I did hear that Woolworths is releasing results tomorrow, so there's probably expectations going to be good. And that's why Staples has had a good day. That's it. Otherwise, Energy's relatively speaking, a good day, and a bad day for materials, utilities, telecommunications, discretionary, healthcare, all down by more than 0.8%. Gold's had I was going to say gold was positive, but not. Gold is down, banks are down, everything's down. And if you have a look at the ASX 20, only down 0.23%. So relatively good, but again, that's probably because of Coles. Is Coles in the ASX 20? And if not, I'm assuming maybe iron ore's had a good day. Banks have had a okay day. Look at it. So seems like we have been saved by banks and Woolworths. We'll say banks and Woolworths. Let's have a look. Oh, only 3 companies up, and those 3 companies are Woolworths, WiseTech, and NAB. And yeah, I'm surprised it's not down by more. There you go. And the worst performing companies: Sigma Healthcare, Fortescue, Rio, REA Group, BHP. So no, iron ore did not have a good day. And CBA is down 0.48%, ANZ down 0.78%. Okay, let's move on to the top gainers today. And the best performing company is a company called 333D or 33D, to go T3D, share price up 133%. I will talk about this company in a second. First time I've ever looked at 333D, maybe. Share price up 483% in the last year. The market cap of this company is 6.61 million, so it's a very small company. Arc Mines has had another pretty good day. And Gateway Mining Gateway Mining, I have brought it up here. I should have had a look. Gateway Mining, okay, so it looks like a restructuring and something happening there. So I'll turn my attention to, I'll talk a little bit more about excuse me, what do you call it? I don't even know how to pronounce it. Triple 3D or triple, yeah, it just makes, you wouldn't say 333D, we'll say triple 3D. Okay, now if we go down this particular list, you'll see, yeah, so Acusensus results, Kelsian Group results, Nuix released results the other day, so that's not results. Might have been like an upgrade or something from a broker, and Nanosonics results, and all these companies are in my top 5. Integral Diagnostics results. So those are the 4 companies plus Coles that I'll be talking about in the top 5 stocks of the day. And so some positive reactions from results. Now, let's talk about this company called 333. Actually, before that, by market cap, yeah, there's Coles, Nanosonics, Kelsian. So most of the positive reactions is because of results. Looks like a pretty good reaction in uranium based off Deep Yellow and Boss Energy. Jumbo Interactive not making it in my top 5. They had results. Coronado Global Resources share price keeps on going up. So I bought in at 20 cents and it's now 39. So I've almost doubled my money. So should I take profits? I don't know. Australian Clinical Labs up on results, 9.6%, but I needed to be above 10% to get in the top 5 stocks. And there's the chart today, SKS Technologies. New Zealand Me also released results, but I was like, ho-hum about that one. Okay, let's talk about this company called 333D. T3D. I was like, oh, why is the share price up? Look at that, 233.33%. Is this another case like we saw with Kaylee Resources, where the share price is going nuts because of no reason? However, in saying all that, they did release something yesterday, Bitcoin acquisition and Bitcoin treasury management. So this company has something to do with Bitcoin. So they're buying and selling Bitcoin. Who knows what they do? Well, we could know. Just open up this business update. But what else do they do? Company that seeks to capitalize upon opportunities in the digital line of business as new technologies are developed from both digital capture and digital creation perspectives. Well, I wish to capitalize upon opportunities as well. It doesn't mean I'm investable. Okay, so it looks like they might be investing in Bitcoin or putting money into Bitcoin. Bitcoin acquisition as part of digital asset management strategy. So why has there been a lot of positive action behind this company recently? No idea. And when I say that, look at this history. So the last 4 trading days before today, share price has gone from 0.7 cents up to 5 cents, well, including today, on not much volume and no news flow. So this company should be receiving a price query from the ASX. The last price sensitive announcement the company did receive was their Appendix 4C in July. There was a replacement Appendix 4C, but I don't count that. So this company has not really released anything. So this is just noise. It's day traders maybe. Funny enough, they are very close to being operating cash flow positive. There you go. Maybe I should pay a little bit more attention to this company. I've just been ignoring it completely. Okay, I would say it's just day traders right now having fun and games. And I'm just waiting for a price query. I'm just waiting for a price query from the ASX. Get onto it, ASX. Okay. Now onto the top losers, and you're going to see the crap company of the day here as well. Peninsula Energy, share price down 45.97% on a capital raising. And there's Kelly Resources down 28.66%. And there we go. Yeah, not going to talk about that company at all. And now, as we go through the top losers, there's nothing else to talk about here. Now, funny enough, Index, I thought, did Index release results today? Share price down 13.6%. But no, they released results yesterday, and actually share price went up. So I did see a little article here in Capital Brief. Index shares slide as analysis remain neutral following strong fourth quarter. Does that justify a share price dropping 14%? I probably would have thought maybe there was a downgrade from a broker or something like that. Apart from that, there was nothing there in the top losers. And if we have a look at top losers by market cap, Reese released bad results the other day, and maybe it's getting to good value. Web Travel Group released a trading update, if I remember correctly. Yeah, there was a trading update here, and it was negative, slightly negative. And Yeah, it was slightly negative, slightly below expectations, I think. And that's why the share price is down a little bit lower, but only down 5.76%. So it's not that much. And then other than that, G8 Education released results, share price down 6.28%. IVE Group released results, share price down 8.47%. Oh, Intelligent Monitoring Group, share price is down 12.69%. They also released results, but if I saw this earlier, I would have actually included that company in the top 5, and it would have pushed out Coles. Maybe I should talk about Intelligent Monitoring Group now. No, I won't. I won't. Maybe I can do 2 charts of the day. Okay, let's just talk about Peninsula Group. It's the crap company of the day, second award for this company. And in fact, when was the crap company of the day? It was crap company of the day on Friday. So twice in 3 trading days. Crap company of the day is awarded to Peninsula Energy. Share price down 45.97%. Share price down 81% in the last year. And if you compare that to some of the other uranium companies, let's do that. So 81 down 81%. And if you have a look at DPLO, up 44%. Boss Energy down 38%. So you're going to see some of these uranium companies up, some down, but not down 81%. It is a crap company. And the reason it's down that amount is because they did a capital raising and at a significant discount because no one wanted shares. And if no one wants shares, you have to give a really big discount to try to motivate and entice people to participate in the capital raising. So I haven't actually looked at this price of the discount. So I'm assuming it's probably about 34 cents, which is a reason why I wouldn't participate in the capital raising, even though it was a massive discount, because the share price is going to drop to that level, more than likely. So let's have a look. Completion T1 placement and institutional entitlement offer. Who would be buying shares in this? Because this has been a disastrous over the last few years, even maybe longer than that. So the capital raising was done at, and they keep doing capital raising as well. Where's the price? 30 cents. Oh, there you go. And also 30 cents. So it hasn't dropped as much as it could have. There you go. Did the share price get down to 30 cents today? No, 33.5 cents. There you go. So a win for investors. The share price has not dropped as much. Now, if we go back through time, I'm going to have a look. It's going to open up the initial capital raising announcement. Just want to see if this was at 30 cents or if it was raised or lowered. Sometimes this happens. Yeah, no, it's down at 30 cents. Sometimes, yeah, I've seen this in the past where the company announces a capital raising at a certain price, and because I saw this once recently, who was it? Was it Tuas? Could have been Tuas. And was it Tuas? It could have been Tuas. I forget. And they announced the capital raising price, and then when they announced the placement, it's actually a higher price, and that means there was a lot of competition for shares, and that's a good thing. So sometimes, in fact, I have never seen it when it's been lowered, but maybe they had to do it at a very low price to get it through. Now, the reason I went to here is, look at debt facility, 15 million is secured, and I'm just going to go back to see when the last time they did a capital raising. It doesn't seem like it was that far back. But maybe I'm wrong. Maybe I'm wrong. Anyway, that is still crap company of the day. If you have a look at the chart, this will just confirm that this company is crap. I'm sorry if you're a shareholder, by the way. But look at this awful chart. They did a share consolidation. So I'm not sure when they did it, but this is an ugly chart. If you go all the way back to 2021, share price was 6.50. Now it's 30 cents. Back then, share price wasn't 6.50. They did share consolidation. It's an ugly looking chart. Maybe this is the bottom. Maybe this is it. But they have so many things going. Uranium still looking pretty good. They have projects in Wyoming. How could you go wrong with that? But I'm not sure if it's management or what. By the way, I can actually tell you when they did the share consolidation just by looking at this chart. They did it in August 2024. August 2024. Oh, there it is. Oh, no. says proposed consolidation of share capital. I was no, looks like it was October 2024. October. Yeah, this looks like it was more in August. Okay, now on to the top 5 stocks of the day. Oh, by the way, I should actually mention this. So I did receive a document for the Tuas SPP, and what was it? The price? And I've never done this before. So there was share purchase plan booklet release. I received it via my super, and the maximum you can apply for is $30,000 worth of shares. Now, the particular price for this SPP was it 550 or something? I forget exactly what, 551. It was a lower of something, 551 or something else. And 551 more than likely is going to be the lower. And look at the share price is now of Tuas, 772. So it was just made sense to apply for as much as possible. And then I will probably take a little bit of profit if the share price doesn't decrease all that much. So I've applied for my full allotment. I expect a lot to do this, and more than likely it will be scaled back, and I might get 5,000, might get 10,000, but the higher the better. Anyway, so that's me with Tuas. I've never done this before where I've applied for the maximum allotment. Okay, now on to the top 5 stocks of the day, starting off with Coles. Share price up 8.56%. Wowzers. This results must have been amazing. It must have been for this type of company with a P ratio of 26. They must have seen 10% growth in revenue. Profit must be up 12% to justify that sort of P ratio. Nope. It was a slight beat, a very slight beat. Revenue up 3.6%. Wow, 3.6. That's like inflation. Imagine that. Imagine a supermarket revenue increasing at the same rate as inflation. That's the sort of company we're seeing here. EBITDA up 10.7% normalized. That's interesting. EBIT up 6.8% and profit up 3.1%. That's normalized or underlying profit. But again, up 3.1%. Final dividend, 32 cents. But apparently the overall dividend was a little bit weaker than expected. But anyway, the whole reason why the share price is up, I actually did write it down. So slight beat versus, consensus. So EBITDA, profit, I think even the revenue was a very slight beat. And there was just a bit of positive sentiment right there. There was actually a nice little article in Capital Brief about this, if I can find it. Yeah, Coles shares saw a supermarket growth beat estimates. And a very slight beat. It wasn't a massive beat. And you can just see by the revenue growth, it's like, okay. Anyway, Jard announced this quarter good, clean result. Fine. Overall feels more optimism and tone of release with a strong start to financial year 26. Oh, I did not look at that. That's one thing I did not see and focus on is any sort of start to the trading year. So that could be fairly important as well. That could be actually driving the share price up. But I wouldn't expect this company to have significant growth. It's a supermarket. It's a mature company. Here we go. So supermarket sales revenue increased by 4.9%. That actually is impressive so far. Okay, so I can sort of understand why the market is a little bit excited about that. 4.9% increase in sales revenue. So that is definitely beating inflation at this point in time. So maybe I am completely wrong with this one. Maybe I'm completely wrong, and these results do justify the share price increasing 8.56%. But my mind goes back to the P/E ratio of this company, 25.35. It does seem really high for a company that is virtually standing still. And what I mean virtually standing still, if you have a look at this company, Coles, revenue growth probably 4% per year. 3.6% over the last 5 years. Earnings per share growth, negative. P ratio, about 25. It just seems really expensive for this type of company. But I could be wrong. And to see if I'm wrong, let's have a look at the P ratio of this company through time. Maybe, no, look at that. Back in 2019, P ratio of this company was 16.18. Seems about right. And it's at the high side right now. Okay, that's all I'm going to say when it comes to Coles. Even though this could be a breakout, I have no intentions of trading this because I don't see much upside moving forward. Look, the chart looks really nice, but the time to get in this is when it looks good value. And at this point in time, for me, no, it's not good value. Okay, that's all I'm going to say about Coles coming in number 8, number 5. Pretty good day for the company. I think the reason I said 8 is because share price is up about 8%. Coming in at number 4, we have Integral Diagnostics. Share price up 12.13%. Now, don't forget, and maybe you didn't even know this, Integral Diagnostics and Capital Health merged, and that makes looking at these results a little bit more tricky. So when it comes to this company, it was just, how does the market react? Oh, it was good results. So I am satisfied to say right now, happy to say right now, that the market loved these results from Integral Diagnostics / Capital Health. Okay, so if you have a look at their results, this little table here, it's a weird little table because on the left they have Integral and then on the right they have Capital. But if you have a look at the change, pretty nice growth. Well, the bad thing about this is you don't have any earnings per share growth, no operating free cash flow growth, a lot of NAs here, but revenue up 6.7%, operating EBITDA up 4.8%, operating NPAT up 8.1%. So I suppose nice growth. Good growth, I suppose. But again, I have no idea what the expectations were. I didn't see any expectations anywhere. So I'm assuming these results were pretty good. The next important thing is any sort of update. Now, also went back to see the half-year results just to see if they had any expectations. No, they didn't. Company outlook, there wasn't anything in here that was amazing, although the group achieved 7% revenue growth in July, which was adjusted for working days on a like-for-like basis. Okay, so, yeah, it's a good result, I suppose. Let's have a look at the chart for IDX. See if this is a good-looking chart. Oh, it's not horrible. Now, the share price did drop when they released results in February. And then the share price, the market said, nah, this is just a short-term issue. And the share price has rebounded back up to the level it was before they released results in February. Okay, so I don't know. Not for me at this point in time. Okay, on to company coming in at number 3, we have Nanosonics. Yes, I do own shares in Nanosonics. Share price up 14.48%. Okay, for this one, what I'll do, this was a beat, consensus beat, and also better numbers than the half-year expectations. So let's do that. Let's have a look and compare their results to expectations. They announced back in, was it results or was it? Yeah, it was results. Here we go. So they did provide some guidance in their results. Here we go, guidance in their results. So this wasn't, by the way, this was an upgrade, and the revenue growth now expected to be between 11 and 14%. Gross margin rate between 78 and 79%. So let's have a look to see the growth in revenue. So don't forget, between 11 and 14%. And for the year, revenue was up 17%. 17%. Well, 14% at constant currency. I wonder if this was constant currency. They don't mention it. Anyway, so maybe it's within range, but at least even if it was at constant currency, the forecast, it's at the top end of the range. So this was a beat. Also, profit came in higher than expected. So what was it? 20.7 million, if I remember correctly. I could be wrong. 20.7 million. Earnings before interest, profit after, 20.7 million. Expectations were 17.5 million. And I also think there was potential, guidance. I wrote down guidance to expectations. So here's their guidance. And apparently this was to expectations. Revenue growth of between 8 and 12% and gross margins between 75 and 77%. Now, the gross margins, I did not have a look at compared to expectations. Gross margins came in at 78.2%. And within their range. Okay. So Nanosonics, I think, had a pretty good results. And I could definitely understand why the share price is up. Now, let's have a look at the chart for Nanosonics. And definitely the chart, definitely the company is starting to turn around. There was a period there where it looked pretty weak. You can just see how the share price dropped a fair bit. And now I think it's starting to move. There's a bit more positive sentiment behind this company. And the share price is starting to turn upwards. And share price actually did pull back a fair bit. And now it's starting to go higher. So there will be a little bit of resistance moving forward, particularly when the share price goes between $4.60 and $5, because the shareholders who bought at that level back at the start of the year. So there will be a little bit of resistance, but this is a pretty good looking one-day candlestick. Exactly what you want to see. So that's Nanosonics coming in at number, what was it, 3? 5, 4, 3. Yeah, I can count. Coming in number 2, we have Acusensus. Acusensus. In fact, there was a little comment. Alex T. says Acusensus financial year 25 results out today. Strong response in early trade, and that strong response has continued. Are you interested in the chart and happy with the trading position? I'm not trading Acusensus, very close to trading this one, but I am not trading it. Okay, Acusensus, this is very important. So share price up 16.5%. Let's have a look at the results and have a look at they did release a bit of a trading update or business update in May. And this is why the share price is up. Very important. Very important. Okay, where's the numbers? Oh, wait there. Here it is. Here it is. I was trying to find it. The company reiterates that it expects to deliver financial year 25 revenue between $58 and $61 million. So let's see how they did. They came in at $59.4 million, which is almost right dang in the middle of expectations. Okay, so not much of a beat there. In fact, right in the middle. And EBITDA pre-share-based payments in the range of 4.3 to 5.5 million. What was that again? EBITDA. And adjusted EBITDA, I'm assuming adjusted to exclude litigation costs and share-based payments. So I'm assuming that's in line with their expectations of it being between 4.3 and 5.5. However, this does not include litigation. So maybe they manipulated a little bit. I don't know. I'm not going to say that. But they do not mention litigation in this EBITDA definition. So 4.3 to 5.5, and it came in at 5.7. It's a beat. It's a beat. I think that's why the share price is up. They also gave a bit of an outlook as well. Where's the outlook? By the way, EBITDA was down from last year, so you can't look at how it moved from last year to this year. That's not important. It's how it compared to expectations. They also gave a bit of an outlook. I'm pretty sure they did. Yeah, here it is. So they expect revenue to be between 79 and 84 million. So nice, some more continued growth for the company. Okay, so that's it. That's it. That's why the share price is up. Let's have a look at the chart for Acusensus. There was a bit of weakness in this chart. Yeah, the share price was in a downtrend. Now, we have seen a little bit of selling coming in today. So it looks like there was a bit of buying initially, and now we've seen a little bit of selling, which is sort of understandable. I'm not sure if I would classify this. It might be, yeah. It could be a bit of a breakout, but I'd like to see confirmation around that or now. I'd like to see that. I don't want to see the share price drop from here. I want to see at least a bit of a consolidation, share price moving sideways. So this could be a bit of breakout for Acusensus. Okay, now onto the stock of the day. I'm a little bit biased about this one. Kelsian. And the reason I'm biased about this, it's actually bias not needed. Best performing company of the day. Share price up 21.84% on their results. Okay, so I am trading Kelsian. And this is another case. I've seen this a lot now. And I'm being driven now to believe that getting in before the results can be done based off the market is pretty smart. And the market knows. Market knows. Now, I actually bought Kelsian on the back of a trading update. So I think trading updates are quite important. And we'll go back to the trading update. When was it released? I did write it down. 7th of May. 7th of May, trading update and presentation Macquarie conference. When the company released this, the share price had been in a downtrend. This shifted sentiment almost immediately. Share price up about 18, 19% on this particular day. And the share price has been slowly going up since then. Anyway, so they were expecting underlying EBITDA to be at the lower end of the previous earnings guidance range of 283 to 295 million. So it doesn't sound like it was much of an upgrade, or it wasn't an upgrade or anything. In fact, you could actually say it was a little bit disappointing. Anyway, so yeah, there it is. Financial year 25 tracking towards lower end of previous earnings guidance range. No change to capital expenditure. So I was a little bit surprised the share price had rallied on this day. Maybe I was. I have no idea. Anyway, so let's have a look at the results and see how these results met these expectations. Okay, so they're aiming between, what was it, 283 and 295 for EBITDA, and EBITDA came in at 285, which was towards the low end of that range. So what's happening? Revenue up 9.5%. EBITDA was to expected. Profit up 2.4%, underlying profit. Statutory profit down 6.1%. Record net operating cash flow. Okay, so what's happening here? What is going on with Kelsian? Why has the share price increased 21%? And they also mentioned it delivered in line with expectations. I would have said, yeah, that makes sense. Okay, so let's have a look. They did give a bit of an outlook for underlying EBITDA in 2026. So between 297 and 310 million. So they are expecting some okay growth, not amazing growth, a little bit okay growth, but maybe that's all it is. That's all that's needed. The market is happy with where this company is heading, and I'm not going to complain. So this is another case where I don't completely see why the share price is up a lot. I didn't find anything in Capital Brief. I don't remember seeing anything. This is when Capital Brief is really useful, when you don't quite understand why the share price is up, and then they mention something and they didn't mention anything. Oh, here we are. Oh, look, Kelsian profit dipped 6%. Oh my God, profit dips. Oh, the share price is going to drop. So you can't look. By the way, Jumbo Interactive sees full-year profit slide 7.3%. But look at the share price of Jumbo Interactive. It's up 10.6%. So again, these headlines can be a little bit deceiving. Now, maybe this will tell us why. Oh, it meant apparently financial year revenue was slightly above expectations, a little bit from 2.18. That was expectations. It came in at 2.21 billion. And yeah, there's no. Oh, no, that's the CEO. I want to see what analysts think, because those are the ones driving the share price higher today. Okay, so obviously a positive reaction from the market when it comes to Kelsian. And I am not going to complain, because I decided to trade it based off their little, there's me trading it, based off that positive reaction from their trading update. And you can just see the share price going a little bit bananas in June, and then the share price gradually going up, and then all of a sudden up today. So a good looking chart for Kelsian Group. Don't understand why, but that's okay. Okay, now on to the chart of the day. And it is, I think I had two, didn't I? Yes. Now we'll start off with the negative one. So International Monitoring Group, share price down 11.61%. They did release results. I thought this company's Appendix 4C was pretty good. I think this was an inflection point for the company, and everything seemed okay. Now, they did have a loss, a pretty big loss, but that's okay. I'll have a closer look at this in the future. So I'm just wondering if this is a bit of a reaction for the market in terms of the results, but the company is performing much better in terms of quarterly time periods. So let's have a look at the chart for International Monitoring Group. Is this a potential buy the dip? Let's have a look. Oh, look at that. So this is when the company released their quarterly results on the 25th of July. Share price up 31.96%. And the chart actually looked pretty good from that. Now, the share price has dipped back. So this is a case of, it could be, but I'm not sure just now. We haven't seen much buying coming in today. That's the other thing. And the other company, the other chart of the day is SKS Technologies. Share price up 6.34%. Share price had been a bit of a tear recently, and the numbers were fantastic. Now, I'm not sure if this was better than expected. It might be slightly better than expected, but revenue up 92%, EBITDA 161%, profit before tax 219% higher, profit after tax up 112%. Now, they were expecting a really good year, so this could have been to expectations or near, or maybe slightly above. By the way, you could. No, this is just chart of the day. This is not looking at the results. So let's have a look at the chart. And the reason this was chart of the day is because the chart looks pretty good. There it is. Chart looks pretty good. There's me buying a $1. I'm not trading this one anymore. So I wasn't originally trading this, but now I do have a longer term position in SKS Technologies. Just riding this wave of opportunity, these tailwinds. You just take advantage of the tailwinds. And the chart looks pretty good right now. Okay, that's it for this particular video, this particular ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.